Good morning, natural gas commodities traders. Today we'll be looking at the support and resistance levels for natural gas, UNG, oil, cold, and gold, and silver, as well as we'll be looking at what's the most likely scenario the price action will be heading into next week, as well as we'll be looking at multiple time frames and psychology of the price action. And if you guys learn anything from this video, make sure to like, comment, or subscribe. They're always appreciated. All right, let's get into it. So right now we are looking at natural gas on the daily time frame. And on Wednesday, you guys noticed that we have this falling wedge that we drew together, as well as that I said that we'll very likely break out this week. And we did on Thursday. So because of the size of the pullback, let's talk a little bit about why I said the most likely scenario is going to be breaking out. And first reason was because we had two bear breaks right here. You can see lacking follow through. So when we have a bear break twice, lacking follow through, meaning the most likely scenario is going to be heading into the next side. And we had that obviously for this day, but the clues that we got on that bear break was we zoom in to the 15-minute time frame. So let's take a look what it looks like on those breaks. So you can see both times that whenever we broke below, bulls played defense, and there was just not a lot of bear volume coming in. You can see we come straight back right away, back above support. So the less time we spend on underneath supports, meaning it's a break without follow through. So that's the psychology of it. It's like this one right here. Right when we broke, we V-shaped back up. The less time that we spend down there, meaning it's not a real break. It's pretty much a bear break lacking follow through. That was the first clue we got on that day. And then the second clue that we got was we also had a strong day the following day. So when we get a bear break lacking follow through and the bulls follow through as well the next day with bear volume, bull volume coming in, then that's a good sign that we know this was the temporary bottom. And the third sign is that we go to the weekly time frame. We know that it's a 50% retracement. That I talked about this. As long as the bulls were holding above this 50% retracement. So from the bottom of the move right here, A, to the top of the move, B, right? This one move, and this is the retracement size. So meaning we gave back half of this move because it's at the 50% mark, right? The 0.5 mark right there. So as long as the bulls can hold above the 0.5% mark, it's favoring the bulls that it will likely bounce because we are still in a weekly time frame uptrend, right? So those are the three clues that we got. You can see every time we bear break, it just bounces. So every week, this is a weekly candle that we close, both week we closed above the 50% mark. So that was the third key for us to see likely scenario. So we're going to be bouncing from here. We have the more concepts coinciding together will increase it probably the most. So we have 3 here, meaning the most lucky scenario here is very likely a bounce. So ended up getting, and you can see we broke above a bull break above this falling wedge. So falling wedge, I've been talking about this as well, is a bullish pattern, especially when it coming up from a daily uptrend and a weekly uptrend into a falling wedge is a bullish pattern. If we don't break below that 50% mark, it's likely we're going to get a bull break. So all that in place, our bull break with a decent bull volume that day. So now what are we looking at going forward? So going forward, I want to see daily trend changes back to bulls. So we had a daily uptrend here, right? But this formed a daily downtrend. So now this was the prior pivot for daily downtrend. And now the bulls, this is one straight move because we have no pivots here. Bulls have broken above the downtrend pivot. So now bulls are changed to the downtrend back to a neutral trend. So the next thing we want is a pivot forming for the bulls. Let's say on Monday, we have one candle going below Friday's candle, right? So that's the pivot now. All of this, none of these candles went below the prior candle. This is one straight move. So that happens on Monday. Now we have to pivot. Now it's daily consolidation is on its way. Then we got to break above the prior high. This double top high right here. That's a daily uptrend confirming once we break that high, this pivot high. So that's what I want to see. The bulls take back their uptrend. Meanwhile, they're still in a weekly uptrend. So their next level of resistance is going to be this double top, which pretty much coincides with 2.8. So that's going to be the same level for me. Resistance and supports are always a zone. It's not a definite number. So that's going to be the mini zone for me right there. You can see we also rejected from here quite a bit as well, multiple times. So it's going to be, I would say bulls probably last strong resistance for them to really get over. If we get over this 2.8, there's not much volume left. Talk about psychology of volume a lot, where the less volume is in one area, the less Bob, Joe, or Sally, or Smith is going to be selling when it comes up to that price to break even. And meaning less people that want to sell to break even, meaning there'll be less resistance. So if there's buyers, then it would just cut through it. You can see if we break $3, there's barely any volume up here as well. So yeah, we'll see if bulls can actually break this 2.8 zone, this tough resistance that's been trying for a while. And structure of the chart is starting to shape out a lot better. You can see the structure of the chart back here. It's just very weak. There's no supports, no resistance. Now we have weekly uptrends going, and the bulls have changed the trend on daily time frames back to neutral. So let's zoom into the shorter term time frames for you guys that are scalping or trading to see. So we also have a 4-hour uptrend confirmed. That's a good sign for the bulls. This is a 4-hour uptrend confirming. And finally, we got an hourly downtrend over here, a mini one, for the bears. So very short term, likely a double top rejection here. As long as the bulls can hold above 2.6, we're okay. And so that's going to be the next level I want to see bulls holding. If we do come down here, I want to see us bounce on this 2.6 level because it was acting as prior resistance. Now it's going to act as support. And for the hourly time frame, 12 EMA is actually a pretty good guide for recent price actions. You can see when we were above it, we bounce off of here. And now this was a hourly downtrend confirming. Now it's rejecting from the hourly time frame. So in the very, very short term, bulls get above the 12 EMA on the hourly time frame and gain back its hourly trend, as well as holding above its 2.6. I want to see it bounce. If we do come down and retest it, and that pivots. But 4-hour is looking good. 4-hour is still in an uptrend. As long as it continues, it's looking solid. It's still bouncing off a 4-hour EMA 12 as well. Continues. Look at the weekly actually. So weekly, this is a weekly uptrend. See how the pivot is always higher than the prior pivot, and it goes above the prior high. So now this low is higher than this low, so it's called a higher low, and this is called a higher high because the high is higher than the previous high. So another higher high. Let's do this from the beginning. Higher high, higher low, higher high, higher low, higher high, and it's continuing. So this is another higher low, meaning this low is higher than this low. So now, if the bulls want to continue their weekly uptrend, we need to break above this prior high right there, this candle's prior high. So that is 2.878. That is a continuation of a weekly uptrend. The reason back here it just always fades away. There's just no structure of the chart. We had nothing back here. We had a daily downtrend, a monthly downtrend, and a weekly downtrend. Everything you can think of in a downtrend here. So even if we had this significant bounce, that was 50%. it all faded away. So now we have better structures in place. Bulls are able to hold these gains a lot better than it used to be. But we are still in a monthly bear flag, but because we have not shaping up that it's gonna be a monthly bear flag for a while. It's not gonna just negate it because we have to negate this 38.2%, meaning same thing, top of the move to the bottom of the move. We need to bounce over 38.2% to negate that monthly bear flag. Now, million% away, so we are going to be in a monthly bear flag for a while. In the 40s. If we do bounce, each candle takes a month, so we're not, even if we shot straight up, it'll take us at least probably 2 to 3 months. If we just went, full bull mode like this for another 2 months, 3 months, but that's likely not going to be the case. Every trend is always going to be consolidating as it goes up, even in the strongest bull markets. Even over here, look how much we pull back when we go up that much. Just from this move, that's a 40% pullback and like over 200% gain, right? So even in strong moves up, we also have strong pullbacks. Yeah, we'll see how this monthly bull flag plays out. Monthly bear flag, if it plays out, goes like this, and then goes lower if it plays out. But obviously, I personally don't think it's going to play out like that. We made psychology of the bear flag is there, so bears would short when it comes up to that level, and then we can potentially come down when they pile in their own shorts, but we're not going to go all the way down to and break the new low, in my opinion. But we'll probably get a slight pullback in some sort when it happens. But I don't think they have the shorting power to take us all the way down and break new lows because there's a lot of supports historically in this $2 range. See, we don't really break below $2 that much. This goes back to like the 1990s, right? So personal guess, but we don't have to worry about that too much because we just have to worry about the short-term time frames and just have this big monthly bear flag in the back of our head that we just got to be cautious of. And then we'll take the day by day look because this gives us more information in the shorter term time frames, and we can navigate our trades, right? Like let's say if we break here 2.6, then this would be the fail breakout, reverse, and go lower. That'll be a red flag. If that happens, we just stop out, and we don't even care about that monthly bear flag. And then let's say we come down all the way here, and then you can re-add back below on this kind of structure down here at 2.3, where it's the low of this big structure, so it should act as strong support. And as long as you have your stop losses and targets in place, you don't have to worry about monthly bear flags. And so that's if we do break that, we're going to $3, this 2.8. And if we do come back into this wedge, break below this 2.6 level, that's a huge red flag for me. That'll be a bull break, lacking follow through as well. So we'll see if it shapes that up next week. Best case for bears, break below here and break through back, negate all of this bull break move. That'll be a red flag if we negated every bit of this move. You bulls, just continue. We'll break this double top 2.8. We'll head higher to test this 2.85. Look at UNG. So UNG, it's very similar to Natgas. Of course, it follows Natgas. It's tradable ticker for natural gas. And we had a bull break as well. And now we are pretty much testing similar structure. You can see the structure if we do break above. If Natgas continues and break above this 2.8, we'll likely be testing this 7.6 for UNG. UNG is also in a neutral trend because it break above this pivot because this was a daily downtrend right there. That's the pivot. And then this move, one move up, is now it's breaking above the high of this pivot. So now it's back to a neutral trend, going from a downtrend to a neutral trend. It's also looking decent. Weekly is more weak than natural gas because it doesn't have a weekly uptrend, but it's starting to shape up one. So if this can break above this prior high right there, 7.83, then we are in a weekly uptrend for the very first time since, if I can remember. And so that'll be a good sign. And see if the bulls can step up. We do see a little bit of bull volume this week, so that's good. Increasing bull volume. So we'll see if it continues. So for oil, we don't want to chart leverage ETFs because I just want to make sure I go through over this every time in case some people are charting leverage ETFs. Because leverage ETFs are decays, and you don't want to chart it because it just skews up the chart every time it goes up twice and goes down 2 times lower. And you know how if you lose 50%, you need 100% gain to make back your gains. So that's why it skews up the chart, because this drops 2x, this only drops 1x, and over time it skews up the chart. But so just chart if UNG breaks support, oil already breaks support. So just chart UNG and natural gas. So don't look at obviously look at your price for oil and cold, but don't chart oil and cold. So oil is a 2x leverage ETF on the long side. So if UNG moved up 4%, oil would have been up close to 8. And similar for cold. Cold would have been down close to 8%. You can see right here, 8.12. That's how it works. All right, let's take a look at gold. So gold, we talk about this falling wedge as well, where it's falling wedge is a bullish pattern, especially when coming up from a strong trend into a falling wedge. And we got the breakout here as well. And because of the dollar being weak during this move, we had a breakout. And the reason we had a pullback the last couple of days, you can see dollar is bouncing, so it's an inverse correlation. So this was a really notable drop. This was super oversold, so you could have taken profit on your gold because we know this is going to bounce. But we got a little bit more follow through than the bears expected on this bounce. So let's see if it continues. Back to gold. So you can see when dollar bounces, gold pulls back. So the next level of support is I want to see gold bulls hold this pivot because this is a daily uptrend confirming. So that's going to be the level that the bulls want to hold. So if we do pull back, break below that pivot, now we're back to a neutral trend from uptrend to a neutral trend. We don't want to see that happen. We want to see it hold the uptrend as well. And if we do bounce, this triple top is going to be the resistance. You can see through here, all this resistance over here, right? So it's going to be a strong area of resistance because going across, you can see how many times we eject from it, how many times we bounce off of it. When the price is above, it's going to act as support. When the price is below, it's going to act as resistance. Support, a lot of strong support along the way, other than over here. See all this support right here. So this is where I want to see gold bounce around this 1950 area and continuing of the daily up. If it breaks below that, we're going back to 1940. So we'll see if the bulls can hold it and see if the dollar is going to bounce or not, because we have FOMC meetings next week. The rate hikes on Wednesday, so that's going to affect the dollar as well. So be careful when you guys are trading gold and silver. It's going to be Jerome's going to be speaking, and he always you get big spikes down, up and down on the dollar on that day. So make sure to be watching. All right, silver, pretty much exactly the same thing. Gold and silver moves together, and same thing. Falling wedge, strong move up to a falling wedge is a bullish pattern. Chances of it breaking out is higher, and we got that break as well. And you can see it's pulling back because gold is also pulling back with the dollar. So next level of support, pretty much exactly where we stand, where we closed. I want to see we bounce off of the 12 EMA, this tail looking line, as well as bouncing off of it close to here. You see all this resistance, we're acting as resistance and supports. So I want to see us bounce pretty much close to this area already. Coming down here, bounce, and then continuation of the daily uptrend. So what I'm looking at, if we do bounce from there, it's 5.3 zone. See all this cluster of resistance here. So that's going to act as resistance when we come back up again to it, which we rejected from our first time. See if we can break it out next time we come back to retest.